This video is for educational purposes only and should not be considered financial advice. Your reward to risk plan works until you break it. Intro: the backtesting blueprint, the trap of higher time frame setups, greed disguised as logic, how to stay grounded. Recap. Intro: in this video, we'll be going over how to look at the higher time frame as just a plan and not as a trade. Ever found yourself in a winning trade? Price is moving beautifully. And then you think to yourself, well, there's a larger target on the higher time frame, so you hold on for more. And then price reverses and wipes out your gains. Well, this video is for you. The backtesting blueprint. The point of backtesting isn't just to feel good. It's to build a reputable edge. You set your reward to risk goals, maybe 2 to 1, 3 to 1, based on data, logic, and probabilities, not emotion. In backtesting, you weren't swayed by higher time frame dreams or wild news. So why shift mid-trade now? If your strategy consistently wins at 2 to 1, then forcing a 5 to 1 on the fly turns a solid edge into a gamble. The trap of higher time frame setups. Higher time frame setups give context, but your entry and management rules are from the lower time frame. Higher time frame bias is valuable before the trade, not during the trade management phase. When you're mid-trade and you suddenly extend your target just because of a weekly fair value gap or imbalance, it's not strategy, it's hope. Hope is not a trading plan. It's the fastest way to give back profits. Greed disguised as logic. You tell yourself, this has room to go higher, but really, it's greed. Your brain's trying to override the math with emotion. Instead, secure partials at your backtested target and then consider runners, if that's part of your plan. Here's a tip. Have runner rules written down before the trade, not made up during the trade. How to stay grounded. Rehearse your exit strategy before you enter. Keep screenshots or notes of trades where greed cost you. Journal your wins when you stuck to the plan and locked in your expected reward to risk. Discipline now means freedom later. Deviate now and you're back in the emotional loop. I have a video that I shared with my Patreon group, and I'm including some of that video in this video as well to help you to understand why it's not a good idea to try to use a higher time frame bias to hold a trade thinking that it's going to go to the higher time frame when you're trading on a lower time frame. I want to go over the trade idea that I brought up in the Discord about trading this move on a daily chart and how you're not supposed to actually just buy and hold if you're a day trader. Now, if you can stomach the ups and downs of the market, then that's great. But normally most people are not able to hold their trade in the midst of all of this chop and up and down movement. So I sent the message out on the 10th of June, which was a Tuesday. And I think I took my trade at around 2 or 3 p.m. And I did some options trades on the GLD ETF, the gold ETF. And this is XAU USD, which is basically gold. And I was looking for a bounce off of a daily breaker. And that happened here. And I was looking for it to go all the way up to the other side of this impulse. Basically, this is the market maker model. You have basically an ABCD pattern and ABCD. And then you have the move all the way back up. So this is a 1 hour chart. So this is our level 1, level 2. And then you see if you had placed your stops at level 2, you would have gotten stopped out. At the origin of level 2, you would have gotten stopped out on this 1 hour chart. And if you would have watched the setup again, you have a level 1, level 2, and I guess you could have entered around 50% here and gotten that move. And that would have been your 2-to-1 would have cleaned up for this loss. And then you had all these other moves, but I was actually trading it on a 5-minute chart. And so I looked at how this was moving, and let me go down to the 5-minute, and this was around 3 p.m. So I actually closed my options trades and I traded it on Forex. And so this is level 1 and this is level 2. So my entry was after we have that 3 candle formation. See the top of this candle, and we almost broke the level 2 high, and I entered there, and then I took it all the way up to 3:30. So that was about 30 minutes of wait time to get a 2-to-1. So if we're looking at that whole big move right here, that was 3 trades versus 1 trade. And if you just had a 1 trade on a 1 hour chart, you do a level 1, level 2, you would have gotten stopped out. And if you tried to get back in, you would have gotten stopped out again at this level 2. You would have gotten, let's see, 1, 2, gotten stopped out again at that level 2. So that's why I said in the other video, the 20 years of trading advice, don't try to hold during this whole move. Try to get your 2-to-1 on the way up. Recap. The win isn't just hitting a target. The real win is executing the plan you built when you were calm, objective, and clear-headed. That's how you build consistency. And that's what separates traders from gamblers. If this hits home for you, drop a comment and a like. And let me know if you're locking in on your discipline this week. And if you want help turning your back-tested edge into a live trading weapon, check out the Patreon or hop in the Discord. Thanks for watching. By popular request, I've launched a Patreon where I share my weekly trades and show exactly how I apply my strategy in real time. Plus, I've set up a Discord channel so you can ask questions and learn with others. I'll be checking in each week to answer questions and offer insight. If you've been wanting to dig deeper and grow as a trader, this is a great way to start. Check the links in the description, and I'll see you inside.